Right at the opening bell from Monday, November 3rd, shares of Datavault AI, ticker DVLT, are exploding higher. After closing last Friday at $2.03, the stock is currently being quoted with a bid of $2.60 and an ask of $2.61, indicating a massive gap up of nearly 30% as trading kicks off. This isn't just a random morning spike, it is a direct and aggressive response to one of the most dramatic bull versus bear battles unfolding in the small-cap space. Many investors who watched this stock get hammered just 2 days ago are likely waking up this morning to a completely different narrative, one that has shifted from a short seller attack to a full-blown meme coin catalyst. The expectation coming into this week was that Datavault AI would be on the defensive, reeling from a devastating short seller report published last Friday by Wolfpack Research. That report sent the stock tumbling, closing down over 19% in a single session. The reality is that over the weekend, Datavault's management didn't just prepare a defense, they launched a counteroffensive. Just this morning, the company announced it would be distributing a Dream Bull 2026 meme coin to all Datavault and Silex Holding Company shareholders of record as of November 14, 2025. This is the catalyst igniting the stock, as the company is not only embracing the meme classification, but is actively rewarding its shareholders with a digital collectible, effectively drawing a line in the sand against the short sellers. To understand the tension here, we have to look at what happened last week. The common belief among momentum traders was that DVLT was a high-flying AI and tokenization play, a company that had run from its 52-week low of 25 cents to a high of $4.10. It had announced partnerships with major players like IBM and was talking about building a Swiss digital real-world asset exchange. The narrative was one of a small company with patented technology ready to capture the next big thing in finance. But on Friday, Wolfpack Research dropped its report, challenging that entire narrative. The short seller alleged empty claims about its AI capabilities, pointing to a center for AI that they claimed was just a small, barely staffed office. The report also targeted the company's leadership, specifically CEO Nathaniel Bradley, and highlighted what it called a questionable $150 million investment agreement with Silex Holding Company, the very same partner in today's meme coin announcement. Wolfpack's thesis was that this Silex deal was a source of massive potential dilution, and that the company was more hype than substance. The market reacted swiftly, and the stock collapsed. Datavault immediately responded, issuing a formal statement that it would pursue legal action against Wolfpack for alleged defamation, but the damage was done, and the stock limped into the weekend. Now, today's news is a direct response. By tying the new meme coin distribution directly to its partnership with Silex, Datavault's management is doubling down. They are signaling to the market that the Silex partnership is not a weakness to be hidden, but a core part of their strategy, one that will now be used to reward the very retail investors who follow these meme stories. This is a high-stakes strategic move, turning the short seller's primary criticism into the engine for the new rally. This brings us to the short-selling dynamics, which are now at the center of this story. According to recent data from Fintel, Datavault AI has a short interest of approximately 7.27% of its free float. While that number isn't astronomical on its own, the context is what matters. The cost to borrow shares, or the borrow fee rate, was last reported at 13%. This is an elevated but not extreme rate, suggesting that while it's getting more expensive to bet against the stock, there isn't a critical shortage of shares to borrow just yet. The key metric many retail investors look for is days to cover, and for DVLT, it's exceptionally low, at just 0.11 days. This low number is a double-edged sword. It means that given the stock's massive average trading volume, all short sellers could theoretically cover their entire positions in just a few hours of trading. This high liquidity means a sustained multi-day short squeeze is less likely, as shorts are not trapped. However, it also means that on a day like today, when the stock gaps up 30% at the open on a powerful catalyst, any short sellers who initiated positions on Friday at the lows are immediately and painfully underwater. They are now forced to make a decision: cover their positions for a significant loss, driving the price even higher in a short-term panic, or double down and add to their short, betting that this meme coin news is just another puff of smoke. What's your take on this battle? Do you think the Wolfpack report was a legitimate warning, or is this a coordinated attack being beaten back by a smart company? For investors, tracking this data is crucial. You can find short interest data on platforms like Fintel, Ortex, or even through many retail brokerage platforms. A spike in the borrow fee rate from here, or a sudden change in the short shares available, would be a key signal that the pressure is intensifying. Beyond this immediate trading battle, what does Datavault AI actually do? The company describes itself as a pioneer in AI-driven data management. Its core business model is built around the idea of valuing and monetizing enterprise data assets. It holds a portfolio of over 70 patents related to AI, blockchain, and data science. The core idea is that companies have massive untapped value in their data, and Datavault's platforms like DataValue and DataScore can help them appraise, secure, and even tokenize this data. This is what led to its partnership with IBM to join its Watson X platform, and its ambitious plan to launch a Swiss digital RWA exchange with Max International AG. The goal is to create a regulated marketplace for tokenizing real-world assets, a sector many believe could be worth trillions of dollars. This is the blue sky bull case that analysts are looking at. And speaking of analysts, the professional view on DVLT is thin but optimistic, though it reflects the stock's recent volatility. Some data shows as many as 7 analysts covering the stock with a mean price target of $7.14, which represents significant upside from even today's gapped-up price. In June 2025, Maxim Group upgraded the stock from a hold to a buy. Other platforms, however, cite just one analyst with a strong buy rating and a more modest $3 price target. This discrepancy highlights the speculative nature of the stock. It's moving so fast on narratives and catalysts that analyst models are struggling to keep up. The company's fundamentals are those of a high-growth, pre-profit company. Its last quarterly report for Q2 2025, filed in August, showed revenue of $1.74 million, which was a massive 402.3% increase year over year. But it also posted a significant net loss and a negative EPS of minus 65 cents. The company's next earnings report is expected around November 12th, which is now a critical date. Investors will be watching to see if this revenue growth is accelerating and if the company can offer any concrete financial projections from its recent string of partnership announcements. The institutional ownership of the stock remains very low, at just over 4.1%. With only 44 total institutional owners on file, this is, for all intents and purposes, a retail-driven stock. This is why the sentiment on platforms like Reddit and Twitter is so important. Discussions over the weekend were dominated by the Wolfpack report, with many retail holders debating its claims. There was a clear divide between those who were scared off by the allegations and sold for a loss, and those who saw it as a short and distort campaign and an opportunity to buy the dip. Today's meme coin news has thrown gasoline on that fire, and the sentiment is now decisively shifting back to the bulls, with many calling for a squeeze on Wolfpack. This is precisely the kind of setup that defines modern-day trading, a battle between a professional short seller's fundamental thesis and the company's ability to weaponize a narrative for a retail audience. Looking forward, the picture for Datavault AI is one of extreme volatility and high potential. The future outlook is a true binary. In the bear scenario, Wolfpack Research is correct. The meme coin is a distraction. The partnerships with Silex and others will result in massive shareholder dilution without producing meaningful profit, and the company's technology is nothing more than smoke and mirrors. This is the expectation the short sellers are betting on. The bull scenario, the reality that today's buyers are chasing, is that Datavault AI is successfully executing a multi-pronged strategy. First, it is using its IBM partnership to gain legitimacy in the enterprise AI space. Second, it is using its Swiss digital asset exchange plans to build a long-term regulated moat in the tokenization of real-world assets. And third, in the short term, it is brilliantly co-opting the meme narrative to build a loyal retail shareholder base, fight back against short sellers, and fund its operations. If the company can successfully navigate this, and if its upcoming earnings report on November 12th can show real accelerating revenue growth, the $7.14 average analyst price target might not seem so distant. The record date of November 14th for the meme coin is now the next major pin on the calendar. Traders will be watching to see if the stock runs up into that date and what happens after. Comment below and let me know how many shares of DVLT you are holding through this volatility. Ultimately, the Datavault AI story has become a case study in expectation versus reality. The expectation from short sellers was that a critical report would expose a flawed company and the stock would collapse. The reality is that the company has leaned into the controversy,